Shares of Norwegian Cruise Lines falling after the company missed Wall Street's expectations in the first quarter. Norwegian saying it's seeing some softening in future bookings here, but plans to offset any weakness with cost-cutting measures. While the company maintained its full-year guidance for profit, Norwegian broke from its peers Carnival and Royal Caribbean, which both raised their outlook for the year. I want to bring in James Hardiman, who is the Citi leisure travel analyst. James, good to have you back on with us. Just take us into your analysis and how Norwegian is differing in their business right now, but perhaps in a more extreme and unfortunate position than some of the others that have already come out.
Sure thing. So, first off, I think it's worth noting that the first quarter was a good quarter for these guys. They beat on the EBITDA line. EPS was a little light. That was 100% due to an FX charge, without which they would have beaten on the EPS line by a couple of pennies. With respect to the outlook, I think what has people spooked to some degree is the idea that they said that they did see some softness in bookings, particularly in early April, because of course they did, right? I mean, early April characterized by Liberation Day and just sort of that maximum point of anxiety, fear, and uncertainty. People aren't going to be out there booking summer vacations. What they did tell us that in the week since, and particularly over the past week and a half, we did see some improvement, and that we're back to sort of the late March level of bookings, which is exactly where they want to be. I think the biggest difference between Norwegian and Royal, who reported last night and really didn't talk about the same level of softness, or any softness for that matter, is just the level of slack that they already had in their numbers, right? I mean, I think we've heard enough from various travel companies, really kicked off back in mid-March with the airlines, who sent shockwaves through the travel market with their negative comments. I find it hard to believe that travel consumers broadly aren't, or at least weren't, taking a pause at the beginning of April. I think the difference is the momentum in the business at Royal, which is, on so many levels the best in class, was such that they were able to look through that and not flow that through to their reported guidance or their stated guidance, whereas Norwegian had less slack in the numbers and ultimately had to.
So let's zero in on that consumer behavior then, because obviously that's what's weighing on the stock. To your point, what does it take for that consumer behavior to roil back in for Norwegian? If they were pausing off the back of tariffs being announced, what gets them back to spending on cruises?
Yeah, I think it's just uncertainty in the current environment. And again, I think it's really encouraging that following what they spoke to being, softness in bookings, choppiness in bookings, whatever adjective you want to use, in early April, that we have seen some improvement in the last week, such that, if we stay at the current pace, we should be in pretty good shape with respect to not only the 2025 numbers, but the 2026 numbers. I also think it's worth noting, this is one of those mornings where it's really hard to tease out how much of a stock reaction is a function of what's going on in the broader market, right? Yeah. My whole screen is red, given that these are all discretionary companies. Nobody needs any of this stuff, right? And cruise companies in particular have some leverage, although the leverage position is much better than it used to be. Yeah. But ultimately there's news out, right, on the cruise industry, and it's perceived to be bad news. I haven't talked to anybody this morning that is remotely surprised by what Norwegian said today.
James, we got to leave it there, but really appreciate you joining us, and we'll get you back next quarter for a little bit longer conversation. Really appreciate it.